Hello guys, welcome back to another video in my channel Serena Trading Moves. So thank you guys for your time and for your support in my channel. Yesterday we had a great live stream with crazy people. We discussed great ideas regarding to the US stock market. So I've got asked few nice questions. So I'm very proud of the community I've built already in the past few days and also building this great community of traders online. So thank you guys for your time watching this video. Today we're going to discuss a very important topic, which is, as you see in the title, Big Tech Worked Out. Are these stocks still worth it? So today we're going to talk about many of the top tech stocks here in the US. We're going to talk the about Nvidia, Microsoft, Amazon, Apple, and also for and Tesla, sorry, yeah, and of course Tesla. So we're going to cover them one by one, and we'll see how these stocks have performed in the past few weeks. Okay. Also, if you guys are interested in the first link in the comment section of this video, you're going to find a link that's going to take you directly to WhatsApp. And yes, there you can contact me. I'm building a very great community where we trade together and do interesting stuff together. Also, I'm keeping big surprises for you guys there. So you might just feel free to send me a message. That's gonna take a lot of time from you. Like it's gonna be like 10 seconds, and then maybe that's going to be a life-changing decision. So you guys can just send me a message, and I will show you a lot about how I trade, and you will get a community there. So guys, please make sure to send me a message. I'll be waiting for you one by one. So let's get back to the topic of this video. So today we're breaking down the performance of the biggest names in the US stock market: Amazon, Tesla, Nvidia, Microsoft, and last but not least, Apple. These stocks have basically been driving the entire market. But the real question is, are they still strong or are we starting to see cracks? I'm going to walk you through each one. What happened, what's driving it, and what could happen next. So before jumping into these stocks, let's zoom out. Right now, the market is dealing with a lot of important data. First of all, we have interest rates that are still relatively high. So we've been on 3.75 for a while now, and they have just adjusted it, and we kept it on 3.75 last Wednesday. Also, the inflation concerns are coming back. The AI hype is still dominating sentiment, and we have a lot of uncertainty about the next move. So, what we're seeing is not just stock specific moves, it's a battle between macro pressure and growth expectations. And that's exactly why these big tech stocks are so interesting right now. So, the first stock we're going to talk about today is Amazon, okay? So, let me just draw why support on the business level. I love to do this on live stream so you guys can see how it works. So you just have to find the tops have been adjusted many times, and then the bottoms have been adjusted in many times, and that's how you find your your support and resistance basically. If you say this one is relatively low, we can just take it to this level, as you can see here, okay? So over the past, let's say, if we see here, over the past, when did we reach this level? Okay, so it's been a while, but let's say from here, last time we moved down this level. So over the past, it's gonna be 8 months, right? From May to now. It's going to be around, 10 months. Over the past 10 months, Amazon is up and down about 2-3%, okay? So if we say relative is gonna be 2-3%. This level is gonna be 2-3%. But we have seen, we have seen going up to 255 and then still on the same consolidation level, going up and down. So what's driving Amazon right now is mainly AWS growth, Amazon Web Services growth. Also, we have cost efficiency improvements and margins expanding after years of heavy spending. But here's the key point. Amazon is no longer just a growth story. It's becoming a profitability story, and the market is rewarding that. However, if cloud growth slows or consumer spending weakens, this stock can quickly lose momentum. So Amazon right now is strong, but very dependent on execution. So we have seen the stock being on this consolidation level for a while. If you can see here. So we're just going to hit this top and then go back again, get rejected somewhere here. If not, go to this to the support level and then we go up again. And that's the story that has been here for a while now, okay? So if you go back, we've reached this level last time on February 24. That's more than 2 years ago, okay? So if you're on the same level for 2 years, we just go up and down or a certain range of value, okay? So the second stock we're going to talk about today is Tesla. So we already have these here, but let's make better ones, okay? So let's remove our resistance and supports for Tesla. So I'm first one here and the second one on top. Then we are on the support level already. That's the second support, yeah, around this area. Okay, so we're on the support zone right now. We can see what the market is going to do next. So Tesla is probably one of the most controversial stocks in the US stock market or maybe the world. Tesla is currently down, let's say, more than 20%. Okay, so more than 20% from its top, its high last December. So what's happening here? Price cuts affecting margins. We have EV competition that's increasing globally, and especially with Chinese EV manufacturers, and a lot of expectations that are still priced in. But at the same time, we have AI coming, we have autonomous driving business, and we have the energy business. And these are the narratives giving Tesla a life. So the problem is the stock is no longer just reacting to deliveries, it's reacting to future promises. So, Tesla right now is not just a stock, it's a bet on the future. High risk, high reward. So, next we're gonna move on to Nvidia, okay? We already have our levels drew here. So, as you can see, we have been on this consolidation level for a while. Same thing for all the stocks you've seen already Amazon and Tesla. And now back again, we have the consolidation level for Nvidia. So, it has been the start of market though, okay? So, it had to if you compare it year over year, Nvidia was at, so we're around this area, right? We're here, yeah, 20 March. We were at 130, 113, okay? And today we're at 179, which is roughly 80% growth or 60, 70% year over year, which is still pretty good, but people are demanding more from Nvidia. But don't forget the market cap for Nvidia is 4 trillion US dollars. It's very hard to make it go double again because you need to make it 8 trillion then. So data centers, the GPUs, the AI infrastructure, this is where all the money is flowing. But here's where it gets interesting. Everyone already knows this story. So the question is no longer, is Nvidia strong? The question is it already priced in? Because when expectations get too high, even good news isn't enough. So Nvidia is still leading, but it's also the most crowded trade right now. So next we'll be moving on to Microsoft, okay? So it's still probably the most balanced play. It has been down around 25, okay, 25% from October till today. So why is that? Because we don't have strong cloud growth, okay? Also, the AI integration with OpenAI is not really doing well, and the revenue model is still up and down. So it isn't as volatile as Nvidia or Tesla, but it's extremely consistent though. And in this market, consistency is powerful. It's basically a safe growth stock, not the most exciting, but one of the most reliable. And I don't think now I think it's a perfect condition to buy Microsoft, especially if we see what's going to happen if we reach this level. So this zone is very important for Microsoft. As you can see here, we have this zone where a lot of stuff happens, okay? So we're gonna monitor the situation. If the market goes down, that means the price is rejected. But if it goes up again, that means people are buying the liquidity, okay? People are buying the bid from here, and then the market will go up again, okay? So last but not least, we're going to talk about your favorite, the most interesting stock, Apple. The performance has been up and down because if you compare it year over year, it's actually um it's still up. We were at 212, we're at 248 now. We still went to levels like 290 already. That was the all-time high. But now we're back to 212, which is the previous rejection here, okay? So this price has been rejected maybe 4 times already, and you're back to it. This is a great zone where we can monitor the situation. As we go back to all the stocks that we have discussed today, you can see the same story happening all over again. The market was consolidating back to the support level that's going to decide whether the market is going up or down. And the story is happening once again here, okay? You can even take this one down here because this was the level that was objective before. This is 244 and we're at 248, okay? So, talking about Apple, its performance has been great, but it hasn't been needed like before. Why? Because you have slower iPhone growth, you have China concerns, less exposure to the AI boom compared to others, and Apple is still a giant, or although everything, but it's no longer the main driver of the market. That's a big shift. Investors are starting to rotate from hardware dominance to AI driven dominance. So, when you look at all these stocks together, you start seeing a pattern. Nvidia is the AI leader, Microsoft is the stable AI integration, Amazon, you have efficiency plus cloud, and for Tesla, we have future speculation. But for Apple, that's flowing relative straight. And this is not random, this is what we call rotation. Money is moving toward AI, growth with profitability, and scalable tech infrastructure and moving away from the slower growth and hardware dependency. So what happens next? These are the two main scenarios. For the first scenario, AI momentum continues. Nvidia, Microsoft, Amazon keep leading. The macro pressure hits. All of these stocks together are correct. Okay, and that's the risk now. Because when leadership is disconcentrated, any weakness can spread very, very fast. So overall, these stocks are still strong, but the market is becoming more selective. It's no longer buy everything. It's buy the right story, at the right price, at the right time. So let me know in the comment section which one of these stocks do you think performs best from here. And I'll see you in the next video, guys. Thank you so much.